Hey guys, it's Eddie Speed here with Note School. I was interviewed by a great guy, David Richter. David Richter owns a fractional CFO service that specializes in working with real estate investors. Simple CFO. So David has over 30 fractional CFOs that work with a lot of real estate investors throughout the country. So his dimension and perspective of the business is very good as to market needs and market situations. And anyway, he interviewed me on his podcast, and that's what this is. But he interviewed me on his podcast, and specifically, we were talking about this tax loophole strategy and kind of the effectiveness of it and the need and the market of it. So you guys listen to this. David's a very smart guy. I thought he did a really a cool job of the interview with me, and I think you'll enjoy listening to him. And just enjoy it. This is definitely filling a niche in the market that I think no one else is filling. The tax loophole strategy, and David does a good job of sort of pulling that out in the interview he has with me. See you later.
Hey everyone, and welcome back to another exciting episode of the Profit First REI podcast. Here's your host, David Richter, and we have another amazing guest, the one and only Eddie Speed. Eddie, thank you for being here today on this podcast.
How are you, David?
I'm doing great. So I have to give you a little intro to Eddie. If you don't know Eddie, you're probably living under a rock because I feel like he is very well known in the real estate investing communities, all the different ones I go to. I see him at several of the masterminds I attend. Everyone respects Eddie. Everyone knows he's the real deal. He's got thousands and thousands of students that will vouch for him. He runs Note School. He's probably the most experienced note buyer ever. He's closed over 50,000 notes in his lifetime, teaches this stuff, helps other people be successful, launched Note School in 2000. This Eddie Speed has done a lot in real estate, and he teaches a wealth building strategy that ties in well with Profit First. Like, don't just make all this money, keep this money as well too. And he's got just some great philosophies. He's a great person, grew up around horses. You're going to hear just some great nuggets today on this podcast. So Eddie, thank you so much again for being on.
Wow, you're soliciting me for a birthday present, right?
Right. Well, yeah, everyone pays me to do the best absolute interest. So thanks, Eddie. Just kidding. No,
thank you. I'm truly honored. I really am. And I tell people I'm certainly not brilliant, but I am seasoned, right?
Yeah. That's a good way. I like that. That's a really good way of putting it. And I think you're not only seasoned, you've helped a lot of other people get seasoned as well too, within their investing journey. But I'd love to talk about about what you're doing with Note School, what you do to help people. And we were even talking before the show started how our philosophies are very similar, the Note School and just building wealth and Profit First. Because there's a lot of podcasts out there about making the money, like going out there and just making it, but not a ton on keeping it. What's the long-term wealth strategies? Like, how does this isn't just wholesaling and it's a one and done deal, which is great, for the certain investor. But I want to talk more about what you do with Note School. So tell us a little bit about how you got started, what got you into it, like how did this transform your life? And then also we can go into what you actually teach and what the other people that you've helped.
Awesome. I got started in 1980. A man that later became my father-in-law. My wife Martha now of almost 40 years, and my father-in-law got me started in the business. He was a retired fireman, so he was sort of the millionaire next door. Built trailer parks. That's what they called them back then, trailer parks, right?
Right.
Built trailer parks and did rentals. Had multifamily, had houses, bought foreclosures. He was just your basic part-time real estate investor, worked hard. And when I came along in the business, his body was a lot tighter than his mind. And so he was trying to figure out how to make a lot more money with a pencil than he was with a hammer. So I came along young, energetic, cowboy, right? And he said several things to me that I never will forget. And let me say a saying that I hope is always my motto. And I hope it is a motto that I can help people with and you can help people with, David. And that is, if your income is growing faster than your net worth, you're growing in the wrong direction.
That's really good.
And that is essentially saying that you don't go do all this to make a bunch of money today and not build wealth for tomorrow. The reason we're in these businesses is not to go get a higher paying job. The reason we're in these businesses is to go gain financial independence, which lets us have independence in a lot of areas of our life. And I think that's what Profit First is. The reason I think your timeliness in it is, yes, you and I are in several masterminds where guys regularly buy hundreds of houses a year. And that's an anomaly. There's only, call it only 400 or 500 of those guys in the United States. There's hundreds of thousands of people that carry a card say they buy houses. There's a half a handful that buy more than 100 houses a year, right? But you have a lot of those guys as your clients, and I've had a lot of those guys come to Note School, right?
Yeah.
And the reality is what I think your impression on them is, look, guys, you're killing it. You're making good money. Don't go leave all your money on the table. Take some of it off. And even if the market goes bad, you're not broke. Your business may be hurting, but you're not broke. And isn't that the concept?
Yeah, that is a great way of putting it.
So the other way to do it is to build long-term income. And the question is, how do you do that? Now, you said this several times when you introduced me. Eddie is a note buyer. Eddie is a note buyer. Now, you even have an employee that's a very high-end Note School student, right? That's one of your fractional CFOs, and you've been around a lot of people and stuff. And yes, I have bought 50,000 notes in my career. But let me tell you, the reality is I am also a real estate investor, right? I've been in the land business for 30 years. You have all the kind of the new wave-o things of guys in the land business. Well, I've been buying and selling land, particularly carrying terms and buying on terms in land for a long time. And I've also been really involved in real estate investing. So I'll tell you how this sort of morphed for me and why I think if this season factor matters, then why I think it matters. I've helped a lot of real estate investors with various creative financing techniques. I set up the note system for home investors starting in 1992. So Ken D'Angelo, the guy that founded Home Investors, came to me and says, I want you to design a note system where our franchisees can create an owner finance note and then sell that note essentially to your note buying company. Now, I did that for thousands and thousands of notes for real estate investors. So I sort of gave them a formula, kind of like your formula for Profit First. I gave them a recipe of how to make notes correctly and safely. Here's what I've discovered. The guys that have done the best in the business end up owning a portfolio. And the older they get, they tend to own paper and not rentals. Now, there's a pattern to that. Why is that true? Because rentals have been really good to people in the last 10 years. The 10-year cycle before, people worked really hard to build rentals, and 2008 came along and they got clobbered. So the market's been really good for rentals. But the other issue with rentals is let's be fair about it, it kind of sucks the life out of you, right? Some people manage rentals well, most people don't. So you go back to a lifestyle, like how do I build a business that doesn't take a lot of my energy, but it becomes essentially my own little bank. There's two ways to do that. You can buy owner finance notes. I've done a lot of that. Or you can go make your own notes, right? You can go manufacture your own notes. And so who would you chase today in a overpriced real estate market, right? Because it's hard to buy a bargain right now.
Right.
It would be really hard to go buy property at a deep enough discount that you could literally afford just to owner finance your way out of it.
Right.
Right. You're a math guy. You know that.
Yes, indeed.
What if you chased a guy that is the most solicited class of property owner that every real estate investor in America is chasing? The most solicited market, and they're having virtually zero success with a segment of that market. And what if you chased a segment of that market? That segment nobody's having any success with. That's either crazy or a good idea. I don't know which, David.
Right. Yeah. That sounds like a good idea of, to go after those ones where they're not
So,
having the
so
success.
you do fractional CFO work. So obviously you run financials every day for real estate investors and their marketing budget. Am I right?
Yep.
You do as much of that as anybody in the industry.
Yep.
Okay. And they spend a lot of money marketing, don't they?
A lot of
20,
money.
30, 50, 80,000 bucks a month.
Oh yeah, easily.
Right? And the most solicited potential seller that they chase is a landlord, is a small time land. Am I right?
Yeah. Oh yeah.
Why? Because the landlord woke up and found out it ain't like on HGTV.
Right.
And
Yep.
and they own 3 rentals and they thought they were going to have this income. Instead, what they found is they invested in a job.
Yep.
And then they wake up and they want to sell. And how your clients do it is they do what we would refer to as list stacking, meaning they find a landlord who's a small-time landlord, and then they look for problems associated with that same guy. There's data companies that can run this data. They can tell you if they got a judgment against them or they're filed for divorce. Am I right about all
Yes.
this?
Oh yeah. Big time.
Okay. I don't want that guy. Who I want is the guy that does not need the money. In fact, David, he doesn't even want the money, but he hates his rental.
Okay.
And then what I'm going to do is the simplest thing in the world, if you know it, and it's impossible if you don't. I'm going to point out to him that he can sell his property and take his gain over the next 20 years. Now, for you, that's very easy, right?
Oh yeah.
How many small-time landlords would think of that?
Right. Small time.
That there's a little known provision in the IRS tax code that's been around for decades. And that provision says that you can take your gain only when you receive the money, and you can push your gain out over literally 20 years.
Yeah.
Am I right about that?
Oh yeah.
Not brain surgery, right?
Nope.
That's the very guy that nobody is closing unless you use the technique I'm teaching. And that is, he does not want the money. And I'm going to show him how he doesn't have to pay his taxes now. He can pay his taxes later. Now, I'm not an accountant or a CPA, but I have been around seller financing for a long time, and I do understand installment sales.
Yeah.
And I've learned that this is the largest percent of landlords fit in this category, not the smallest percent. The smallest percent of people that need the money. The largest percent of landlords who would love to sell just never have had it positioned to them where they emotionally go, oh, well, God, if I knew I could do that, I'd sell. That's my strategy.
Awesome. And that's where you've been able to do it 50,000 times. And
I have over 40 years figured out niches in the market. Like we have a boom market. Right now is a boom real estate market.
Oh yeah, big time.
But not everything is booming. There's 1 million loans in forbearance. About half of those loans have done some kind of a modification thing, and half of them haven't applied for a modification. That's interesting.
Yeah.
There's 2 million loans that are delinquent and not in forbearance. A notice of default is coming to them within the next 9 months. I would say that's a void in the market. You got 17 million landlords dominating the single family rental market. And let's be fair about it. How many of those people would say, what percentage would say rentals have been unbelievable? I'd do it times 10 again.
Right. Probably a huge percentage.
So that's a void in the market. So what creative financing does is finds a void in a good market. See, if you can buy a delinquent note, and I can buy lots of them right now, I'm buying it in a boom real estate market. I'm not buying the delinquent mortgage like I did in 2010 when everything's dropping like a rock.
Right.
Everything's like this, but yet there's a delinquent note. Or I find a real estate investor that would love to sell, and I show him a tax strategy where he wants to carry seller financing for me. You see that?
Yeah. You're educating and helping them understand how to get the money, but in a better position for them.
David, look at yourself, right? Your mind is very programmed towards real estate investors and their financials. And
Yep.
you understand the intricacies, you understand the moving parts in their financials. You could redo the puzzle pieces, right? You totally get this. You're very rare. There's not a lot of people in the world that have that mind the way you do that can do that, but it's how you think. So you wake up every day with that mindset. For 40 years, I've woke up with a mindset of where is there a void in the market that creative financing could produce an opportunity?
Yeah. Wow. That's awesome. I love that. And for the listeners, if they wanted to get started, like what is the start of that journey? Like for them, is it finding those niches? Is it going to note school? Is it, like what is it to be able to start creating that wealth? Because that's what, like we said at the beginning, profit first and what you're teaching at note school have in common. It is that long-term wealth building strategy. So how do most people get started when they go down this road?
Well, I don't think I've given you this website yet, so it's very funny that you use those words.
There we go.
Because that where I'm going to send them is noteschool.com/get started.
Well, there you go.
That's really
awesome.
a true thing, and I didn't tell you that ahead of time, did I?
No, he did not. So that's how you get started.
Let me say this. There's directions that people can take. There's clarity that people can take. What I hopefully have done in the first little bit here is kind of struck a match. Like, I'm gonna tell you, David, how I really kind of see the real estate investing world. Okay, yeah. I've had, of the top 400 or 500 house buyers in the business, I probably had 40% of them, maybe 50% of them that have come through a note school thing in the last couple of years. That's honor. I get a badge, you get to train the seasoned guys and stuff. But the truth of the matter is they're not hurting right now. They're not in a huge position where they need to change what they're doing. You do their financials. Am I saying that correctly?
Yeah, totally.
Right? They've made more money than they've ever made.
Yep.
You and I have a great mutual friend, Jerry Green. Yep. He and I are having this very conversation literally last week. I said, but the little guy, the guy that buys 2 deals a year, 5 deals a year, 15 deals a year, I don't think his business is doing what the ninja guys are doing.
Right.
And this is what Jerry was saying last week. He says, I'm telling these guys, you don't need more leads. You need to utilize your leads better. And so what I'm suggesting is this would be a really perfect deal for not the giant. You and I already kind of know the giants. They don't need to come watch this podcast to know what Eddie's going to say or you're going to say, right? They hear us talk all the time.
Yeah.
But the guy that's not the giant, how do you go find a niche? And I always found out the best strategy, David, is when they think you're so crazy, they sort of want to put you in a straitjacket. Right?
That's great. Yeah.
That's the best strategy, is when you have something that sounds so out of the box. They couldn't even wrap their mind around how somebody could do that. Mm-hmm. I'm looking for a guy that doesn't need the money.
Yeah.
I mean, the punchline is the guy I'm looking for, I'm positioning him a tax strategy he does not know about. I'm not saying it's brain surgery. I'm just saying most small-time landlords don't know about it. Right?
Yeah.
And let's be fair about it, David, their accountants probably don't know about it. Or if they knew about it, it wouldn't be to the degree that they would suggest they do it.
Right.
And I'm not saying they didn't pass a CPA test, and they probably know when we said installment sales, they're like, oh yeah, I know what installment sales are. But it's not top of their mind that they would think that this would be a way to help the guy get rid of the thing that is making he and his wife the most unhappy. And that's the truth. It's their rental. Right?
Yep.
And what if they could turn their rental into a bank? Isn't that what they really wanted? Is real long-term passive income?
Right. That's why they got into the game.
There's an old guy named Zig Ziglar. You might have heard of him.
Oh yeah, for sure.
He said, give a customer what they want and you'll get what you want. Right.
Mm-hmm. Yep.
And so this is exactly what that is accomplishing. You are giving a landlord what they want. And as a result of that, they're going to be willing to sell or finance you on the acquisition. And you say, well, why would I want financing? Because the way we can structure financing is going to create cash flow opportunities for you, because you're then going to be able to resell that property on a wrap note. And if you paid 2% interest when you bought it and got 6% when you sold it, I think you own a bank.
Yep. Yes, indeed.
Isn't that what your bank does?
Right. Exactly. They
take your money and pay you almost nothing and loan it to
right.
me and charge me more.
Exactly. Yep. That's such good stuff. And I love what you brought up with Jerry too. It's like, this is not 2008, 9, 10, 11, where you've got the hammer beating people over the head with the cash price. It's like, what are the different exit strategies? What is the best for that end investor? And like you said, the sections of the market that aren't tapped out, that aren't like flocked with other real estate investors and the million people, and you've got your truck driver and everyone else, doing those types of deals as well too. It's like, this is where now you're putting another tool in your tool belt that is a very effective tool to not only solve a problem for them, because now you're educating them, but you're also making, like you said with Zig Ziglar, exactly like that. You're also getting what you want, is the long-term wealth building as well too.
Well, you're trying to, the house buyer is out there trying to give somebody money to somebody that doesn't want the money.
Right.
Right. Yes. He's propositioning something that is not what the guy wants.
Yep.
And what he wants, let's be fair about it, he wants his rental to produce long-term passive income without him having to go do anything. That's what he wanted when he bought the rental. Creating owner financing for him will give him exactly that. And it lets him defer, because I say it like this, they have a lift in their real estate values, right? The market's been good to them. The real estate market has been good. The rental management has not been good.
Yeah.
Now you're saying, well, okay, well, why would somebody sell right now? Right? The trees are going to grow to the sky.
Right.
Right. I mean, there's, I'll say one thing. Somebody's selling a lot closer to the top of the market than the bottom of the market. And I'm not trying to go be the gloom and doom and say that everything's going to crash, but we're going to see a cooling.
Yeah.
And I read data every day. It's not like, I look at all the, economists and mortgage servicers and stuff like that. And we're not going to see what we saw last year likely in this scenario this year. It might see a lift. I'm not saying it wouldn't see a lift, but it's not going to be the crazy thing that like it's hockey sticked up in the past.
Right. No, I love this. This is great info. If you're listening to this now, this is who Eddie Speed is. This is how he trains. This is how he's trained the people on the team, his students, his coaches. Like they know how to help you get deals, get better deals, and get the long-term deals that you're really looking for that solves a specific problem, that people don't, that some people don't even know exist, which is, like you said, Eddie, like the best, because then it's that unicorn type thing of like, oh, wow, didn't know that this was even an option. So absolutely love that. Now, with your illustrious career here, what has been some of the biggest roadblocks when you've gone down the path of, buying notes, or like, what are some of those things that you're like, hey, avoid this, or pitfalls that if someone's getting into it, that they might want to stay away from?
That's a great question. I've bought 50,000 notes. I probably have looked at 400,000 notes.
Wow.
And so why didn't I buy 400,000 notes?
Right.
Right. Well, sometimes they were in a financial position where they didn't need to sell me a note. Believe it or not, a higher percent of the time, they created notes that I was unwilling to buy. So here's the waterfall. And I'll promise you, I've got thousands and thousands of field trips looking at portfolios of people real estate investors that created hundreds of thousands of notes. So this is a long developed opinion. Junk property will never create good seller financing.
Hmm.
So if you're going to seller finance junk, don't call me because I'm not going to help you. Okay. Junk property attracts junk buyers. And who wants that bank? That'd be like me saying to you, if I owned a bank and I want you to buy stock in my bank, I'm going to finance substandard collateral with people with substandard credit.
Right. No, thanks. Pass.
Exactly. So what I think that my unique strategy, what makes me the most unique is I start out with really good collateral and figure out a unique proposition that creative financing will work on that property versus just trying to go buy something that the bank's unwilling to make a loan on and say, I'm going to be the bank because nobody else will. You see what I'm saying?
Yes.
In other words, if you're talking about wealth, it's what's the likelihood the loan's successfully going to pay for the next 15 or 20 years? That's the real question. I mean, how many people have you seen that have sold a junker piece of property with insignificant down and not really qualifying the buyer? And they got, well, I sold that property and then they're counting their money, but wait a minute, they haven't gotten paid yet.
Right.
That's not profit. That's crossing your fingers.
Right. It's a wish.
So if you're asking me, the one thing that I've seen and the thing that I've tried to change is to teach people the real use and value that seller financing will be good to you a long time in the future.
No, that's really, really good. So with what you do now, you not only teach people, but you are still active. You have a team now. You've built a team that helps you and that has grown that operation. How many notes are you buying in a year right now? Like, are you, because you're still very active in that space?
Yeah, I would say in the last 5 years, we've probably bought 8,000 to 10,000 notes.
Oh, wow.
And so, we're definitely in the space. I have a very active real estate investing business where we buy land, and I have a great set of partners in that business. And that's turned out to be, a really good, lucrative business. And I end up partnering with students in various ways. Some of it is we can help people with certain functions that we are very seasoned. Our team has bought within my offices here. We can account for over $3 billion in notes bought.
Wow.
And so we have a lot of experience in various types. And some of those guys are like exceptionally better at me at operational stuff. So, they have a genius zone that's, different than mine and mine different from them. And, but yeah, we're very active in doing the business. I built Note School to learn, to be able to do business with our students.
That's awesome.
We're just think about it. In a 20-minute conversation, we've painted a picture of what's possible, what's a niche, why this niche is different than other people are chasing. And so you can imagine if you take people down a lineage and show them these things, then all of a sudden then they might bring opportunities, and they're like, hey, Eddie, this is a little bigger than me. Can we figure out a way to do something together? Oh yeah, probably so. Because you know what you're doing now.
Right. Oh man, that's so good. And from the aspect of you're doing it, you're still in the trenches, you've still got that team, and you're not, so that's the real deal. But then also helping other people get there as well. It's not just education, like be gone, here you go, go out the door. Like, no, here, let's partner together. You've got a big deal like that. Like, let's structure this together and let's get to where where you can do these deals as well too. So I love that. That is so great, because it is, you've painted that picture, taken down that road, and then you're like, let's walk it together until you can fly, like until you're down the road here and you're teaching someone else and helping someone else get to buy their first note. So absolutely love that. I only have a few final questions here with our time. Then this is just a general question about money. So what lessons about money do you want to pass on, or what one big lesson would you want to pass on to the next generation that you've learned over your illustrious career?
Well, I think I think probably it's clarity of what wealth is and the difference between being a business owner and having a business that is your job. And so I think, for me, it's like, I've seen a lot of people that have done really well and wake up, 10 years from now and you think, what happened to them? And I think it's because they lost a perspective of what they thought was money and how they utilized it. And it's all really relates back to what you're so smart at, which is profit first, because you've seen a lot of guys and somebody says, oh man, 10 years ago, they were this or that, they were all that in a bag of chips. And you're thinking to yourself, what in the world happened? It's hard. I'm going to tell you something. You go through a lot of cycles. It's hard to hang on to money sometimes.
Right. Yeah. And no kidding. See that all the time. Even in up markets, it's like, hey, just in some of the decisions made, during these times, it's like, come on, got to get there. No, that's great, because that's something I want to pass on, is especially I've got a little daughter now. It's like, what's the difference between real wealth and just making the ends meet, or just the living deal to deal, or whatnot. So absolutely love that. Then do you have any other just general advice for the real estate investors listening to this before we end here and give them that link again?
Well, it's the oldest saying in the world that your net work is your net worth. And you and I know there's all these social media sites and there's all these Facebook pages and there's always somebody with some hot sports opinion. Don't go to some social media site and ask people the deepest, darkest, most important decisions you need to make in your life, unless you understand the competency of the person giving you advice.
Exactly.
Am I right?
That is so good. Like, just park there a while and preach, like that is really good stuff. Oh, man.
So, I operate with a lot of people giving me a lot of advice, but I have some clarity as to their competency before I ask for their advice.
Yeah.
And it ain't going to be on Facebook. I'm asking it. I'm just saying.
Oh man, that's really good. So your network is your net worth, and make sure that those people have a net worth that you're wanting to network with. So
that's pretty much it.
Yeah, that's really good. And we do, it's getting in those rooms where you feel uncomfortable. It's because then you're growing. You feel uncomfortable, you're growing. You have those feelings of doubt and imposter syndrome, you're in the right room. Those are the right things to be feeling at those times. And then going up to those people and saying, what can I do to bring value to them? And then learning from them and really seeking where they came from. That's awesome. So Eddie, this has been amazing. Then let's give people that link again, if there's anything else that you want to ping them to, but you brought a lot of value here. I want them to be able to give value back. So it's noteschool.com/get started, correct?
That's it.
There we go. Boom. This time he did tell me, because he told me about in the middle there, but noteschool.com/get started. So to get started on your journey with working with Eddie, you could work with Eddie here. Like, you bring him deals as you get those deals, so that way you can see the process, work with his team, work with the amazing coaches he has. I've met his people too, and they're just like Eddie. Like, if you can't tell, Eddie's just a good person that likes people, that wants to see other people succeed. And that's how he's built his team. He has a great culture, great people, great, just everything there. I know a lot of people there. So Eddie, thank you so much for being on today, for sharing that wisdom. And I really appreciate you sharing with our audience here.
Thank you very much.